Thank you for joining us today at our Demystifying Mortgages webinar. Today we are joined by our mortgage experts to help you to understand more about mortgages and discover the reality behind a handful of mortgage myths. Before we dive into the mortgages myths, I'd like to give you a quick introduction to Taylor Wimpey. We have been building new homes since 1880, using a wealth of experience to improve our practices over the years. We are an industry-leading quality builder with the highest score on the NHBC. We build around 15,000 high-quality new homes a year across the UK, and with over 6,000 excellent reviews on Trustpilot. We also have invested £447 million in local communities to fund improvements. That was in 2019. We will begin our webinar looking at 10 mortgage myths with answers from the mortgage experts. Hopefully some of these will give you the answers that you're looking for. However, if you do have any questions, please do put them in the questions and answers, and we will then be able to directly answer them if we don't manage to get through to them today. We will also be picking some questions at the end of the session. So without further ado, what I'd like to do is to introduce you to our panelists. I'm Nikki Gibson, I'm the Sales and Marketing Director. We have Phil Tull, who is the Operations Manager at Threshold Mortgages, and Andy Barlow, New Homes Development Director at Mortgages First. Welcome, Andy and Phil. Thank you for joining us. So, without further ado, we will jump into the first myth. Young people can't get on the ladder at all. Over to you, Phil, for your thoughts on this one.
Well, thanks, Nikki. Many people in their 20s and 30s think owning their own home is actually a distant prospect. But this is far from the truth. While our research shows that young people see saving a deposit as the biggest obstacle to getting on the ladder, it doesn't need to be. People think it's a daunting task. Mortgage lenders now offer loans on as much as 95% of a property's value, meaning you'd only need to raise a 5% deposit. Plus, you may be able to take advantage of the government Help to Buy equity loan scheme, although this isn't currently available in Scotland.
Thank you, Phil. That's really encouraging, especially for any of our younger members out there that are considering getting on the ladder. So that's really great. Thank you. Over to our next myth. You can't get a 95% mortgage anymore. Andy, what do you say in response to this myth?
Yeah, thanks, Nikki. Good evening, everybody. Just following on from what Phil has said there, it is more difficult currently to get a 95% mortgage, and there are only a handful of lenders that are currently providing this. If you can't secure a 95% mortgage, it might be worth considering other available schemes. Phil referenced Help to Buy, which basically works where the lender provides a loan of 75% of the property value on a mortgage, and then the government provides an equity loan of 20%. So it can really help people bolster their ability to buy a property using only a 5% deposit. As Phil referenced, unfortunately, it's not available in Scotland, and it's also worth noting that Help to Buy as a scheme itself is coming to the end at the end of March in 2023. There are a few other equity schemes available currently, and there's more to be expected to come to the market over the next few months.
That's great to hear. Certainly at the moment when house prices are where they are, you know, trying to get your savings up to a certain level, it's really encouraging that there is help out there from lenders, and like you said, hopefully we'll see some more of that in the future. Thank you. On to our next myth. You can only get a mortgage from the company you bank with. Phil, is this true?
Yeah, this is a good myth, Nikki, this one. Lots of people believe that their existing bank is the one and only place to go when it's time to think about getting a mortgage. That might be because our banks will have sent lots of emails and letters advertising what they can offer, often alongside what they believe are their preferential rates. But it does make sound sense to look around a little. Not only might other banks be able to match or better those offers, but there are plenty of non-banking organisations that can also provide you with a mortgage.
Again, really great. I mean, it's obviously worth looking around and not just sticking with our own bank. So that's very good advice there. Thank you. Over to our next myth. Bills, debts and other outgoings won't affect my application. I think this is a common question, Andy. Are you able to expand on that?
Yeah, sure. We definitely need to dispel this one, Nikki, because it's certainly not true. Any monthly outgoings will be considered in your application to assess mortgage affordability. This can include things like grocery bills, utility bills, debt repayments, car finance, car leasing, student loans, to name a few. All of these general expenditures will help the lender to assess your disposable income. Things like hire purchases and financed purchases are usually annualised, and then the final amount is taken off your annual income. Apart from this, lenders will also conduct an assessment of your finances in case of your circumstances changing, which will assure them and obviously you that your mortgage repayments will carry on being able to be made should something change.
Yeah, I mean, it's a good thing that obviously outgoings are also considered when looking at affordability of a mortgage. So like you said, they do go towards it and the lenders do take a look at it. So that's good advice. Thank you. Myth 5. You need to have perfect credit rating to get a mortgage. What's your experience with this, Phil?
Look, it's certainly true that you may struggle to get a mortgage with a bad credit history, but by no means will your credit score need to be perfect. Getting a mortgage can be difficult if you've got a bad credit history, but it's not impossible. Some mortgage lenders actually offer bad credit mortgages, specifically designed for people in this situation. However, there is a big difference between a bad credit history due to a missed loan payment or a county court judgment, for example, and having no credit history at all, which might be the case if you've never taken out credit or a loan.
Absolutely, Phil, and I think that's probably encouraging for people who maybe have had a bit of an issue in the past, but all is not lost, and there is help out there. That's great, thank you. There's no point looking into mortgages until you've found the home that you want to buy. This really is a great myth, Andy, and I'm sure that you can bust it for us.
Yeah, I mean, it's a mistake for two reasons, this one, Nikki. Firstly, by talking to an advisor beforehand, you'll be able to get a realistic picture of what you can and can't afford to buy, given your budget. The other important thing is that you can get yourself in a mortgage agreement in principle, sometimes called an AIP for short. Though these are often time limited, they act as a provisional agreement between you and the lender, and means that when you find that house that you really like, love, and you want to move quickly, it will enable you to do so.
It's a really important myth to bust, and sometimes it puts you in the best position when you do find the house if you know that you have got that mortgageability behind you. So it is worth doing your research beforehand before finding the home of your dream. Thank you, that's a great answer. Myth 7, it costs me more to pay for a mortgage than it does to rent. I think, Phil, this is again such a common myth, and really one that I'm sure you can explain more on.
Yeah, thanks, Nikki. Definitely. I mean, in many cases and in areas, what you repay on your mortgage each month may be lower than the local rental values that you'd have to pay. It's also important to consider that with your mortgage repayments, you're adding to the equity you own in the property each time, whereas you won't be building any equity as a renter. A mortgage will potentially give you more money to spend on discretionary items each month. And by purchasing your own home, you're starting to establish security for the future.
Yes, absolutely. I think that it's a very important myth, and a common thought is that mortgages are expensive, but we know that with rising rental costs as well, it is worth considering your first mortgage and getting on the ladder. Start investing in your future. Thank you very much for that. Myth 8. The mortgage with the lowest interest rate is the best option. Over to you, Andy, with your experience on this.
Yeah, thanks, Nikki. I mean, it's definitely right to consider the interest rate, as this can affect how much your mortgage will actually cost. But that's not necessarily to say that you should assume that the lowest interest rate means the cheapest mortgage. I know it can be the default look, to find the right sort of mortgage rate for people, but the interest rate you pay is just one of several factors influencing the overall cost of a mortgage. You also need to look at things like the type of rate. So the interest rate on a discount or a tracker rate could rise at any time. On the other hand, a fixed rate mortgage guarantees that your interest rate will stay the same for a set period of time. And it could be more suitable if you want your mortgage repayments to stay the same each month during that period. The other thing to consider is the length of the rate period. In most cases, a fixed discount or tracker rate will only last for a set number of years, known as the initial deal period. Afterwards, you'll be moved on to the lender's standard variable rate of interest, which is usually much higher, meaning you should look to remortgage if that's appropriate at that time. Another important thing to consider is the fees associated with the mortgage. Many of these mortgages carry fees ranging from £100 to well over £1,000, which can make a big difference to the overall cost of the rate. And lastly, just to consider is cashback. Some rates have a higher interest rate but offer cashback or a free valuation when you take out the mortgage. This can be welcome at a time when you're spending thousands of costs on buying the new home, but you do need to weigh up whether it's worth it in the long run.
Some really great points there, and a lot of detail. And I mean, really, what you're saying is it's not necessarily the monthly amounts. There's all sorts of things to consider. So it's definitely worth talking to a mortgage advisor about all the different rates that are out there. Thank you. Lenders will only agree to a mortgage for people in full-time work. I think most people assume this, Phil. What are your thoughts on this?
Yeah, this is definitely a common misconception, Nikki, that lenders see anyone not in full-time work as a risk. With the rise in freelance, flexible and contract working in the UK, lenders today may take a much more individual approach when it comes to assessing people's employment situation. There's every chance they'll lend to you, provided your income is stable and sufficient for what you need to borrow.
And I think that we're all seeing a real change in people's working patterns and contracts, as you said. So, this is going to be more and more on people's minds in terms of the way that they're working and the changes in the working week and how that can affect their getting a mortgage. So it's very comforting that the lenders are taking that on board. Thank you for that. So we're going to come to our last myth for now before we go to the questions. You can't get a mortgage if you're self-employed. Again, this is a very similar question to the previous myth, but Andy, what's your advice on self-employed mortgages?
Yeah, I mean, more specifically with self-employed, we've seen a shift in the type of work that people do. Self-employed has become more apparent to a lot of people following the pandemic. And as Phil's already referenced, changing contracts and the way that people work from that point of view. What it's important to notice, though, with this particular myth is that home buyers who are self-employed actually do have access to the same mortgages as someone who's in employment. However, where obviously an employed buyer has access to pay slips, the self-employed person won't. So this means the process providing and proving that you can make repayments to the mortgage could be more difficult. Self-employed people generally need to produce a tax assessment form to the lender, which is called an SA 302, or of course business accounts for their earnings to be taken into account by the lender.
Again, great advice and really comforting for people who are self-employed and do want to be considered for a mortgage. So thank you for that. So thank you to our panelists. Those were the most common questions that we certainly as experts find coming across our desk. But obviously we've been having some questions coming into the Q&A. And we've got a little bit of time left here to go for. I think we're going to go for 6 questions, but we'll see how we go. So let me have a look. Okay. Oh, this is a good one. Philip, I'm going to direct this one to you, Phil. How do I know if the lender will accept me?
Well, thanks, Nikki. Yeah, this is a good question. Each lender has their own lending criteria, first and foremost, and you will be accepted if you fit within this criteria. But whether you fit or not is actually checked up front when you do complete an agreement in principle, as Andy was talking about earlier. If accepted, the lender is happy for you to proceed to a full mortgage application based on the information you've told them, subject to you obviously substantiating that through required documents and things.
That's great. That's a really good question that's come in as well, but thank you for answering that. A very topical question has actually come in, and it's been quite a recurring question as we've been going through the myths. And this one is to do with interest rates. So I think a lot of people want to understand a little bit more around the interest rates rising and how that will affect their mortgage. So I'm just going to pass this one over to Andy.
Yeah, thanks, Nikki. I mean, obviously, it's very timely, as you mentioned. You know, we've seen some base rate increases over recent months. You know, we've operated for around 13 years on base rate being less than 1%. So it can be a little bit unnerving for people when they start to see rises in interest rates. What's important to note is if you're on a tracker mortgage, which is a product that tracks the Bank of England base rate, your mortgage rate will increase in line with any rise in those interest rates, so your payments will increase. The difference between that and a variable mortgage deal, such as a discounted variable rate or standard variable rate, is that with these ones, the rate may be influenced by the rise in Bank of England base rate, but it's also at the lender's discretion. In some cases, a lender might pass on bigger rate increases to its variable rate mortgage customers, but obviously that is, as I said, a discretion of the lender. And they could actually impose less than the change in base rate to their clients as well.
So I think, again, it is a question of shopping around and getting the best product for yourself. But although we are seeing small interest rate rises, they're still reasonably affordable. So thank you for that. That's a good explanation. Another good question that's come through. This is about how complicated it is to get a mortgage, and I think it's a really good question. Is it complicated to apply for a mortgage? Phil, are you able to help with this one?
Sure, no problem at all, Nikki. I think the starting point with this is to understand that there's professionals who work with this every day who are there to help you. So you've got your advisor, and their job is to help you with exactly this problem. It's always best to get organised before you inquire about a mortgage. That would be my first advice. You will need a number of things. You'll need to prove your identity and current address, and have some specific documents available to support your income. So it might be pay slips, as Andy was talking about, self-employed. It might be an SA 302. Just something to prove to the lender what you actually earn. Plus also they want to see the other side. So they'd want to see bank statements to show any regular expenditure that's going out, along with proof of your deposit. So they're likely to require an account statement which shows the balance of your deposit and that it's available for use. And sometimes they may want to know how that's built up. So they may want supporting accounts to actually verify where the money's come from.
Thank you, Phil. So really it's about talking to someone who has the expertise that can guide you through it, but it's about having all your documents ready to prove and to provide for the lender. So that's a good answer, thank you. I think this is a really good question, and sort of related to some of the questions at the beginning of our mortgages myths. And this is about a gifted deposit. Obviously 5% is quite a lot to be able to find, and we've had a few questions coming in saying, are they able to use money that has been gifted to them? Andy, it's a good question.
Yeah, it is a really good question. I think, you know, for me, when I was buying my first property, a gifted deposit wasn't necessarily something to be considered. I think people are generally more likely, and it's quite common now to hear about people, you know, the bank of mum and dad and those sort of scenarios where people are providing deposits for their children or relatives to get on the property ladder. Yeah, in most cases, you can use a deposit that's been gifted to you. However, I would just stipulate there that it's usually best if it's been made unconditionally. So, for instance, the person doesn't want the money back. Any conditions that do get placed on that gifted deposit might cause the lender to be a little bit concerned. The other thing that is, aside from the mortgage specifically, but more relating to the deposit, is that it's also really advisable for both parties, so the person that's giving the deposit and also the person receiving it, to understand any potential tax implications about making and receiving the gift.
Okay, that's good advice, really good advice. And I think we certainly see it in the news that the Bank of Mum and Dad is one of the biggest lenders now in England. So there's going to be a few telephone calls maybe on the back of this myth, on this question. So thank you, Andy. Next question, just have a look. How long will the mortgage process take? Phil, I'm going to hand this one over to you.
Yeah, thanks, Nick. And I'm glad you come to me, because what I was just saying about how complicated the mortgage process is actually has a large bearing on how long it actually takes to go through the process. So the better organised you are, by and large, the quicker the process will be. Lenders will make a number of checks on you, also your income and your financial history. They will also need to value the property you're intending to purchase. And when satisfied with everything, they'll issue you a mortgage offer. Now, typically, lenders take 2 weeks to reach offer stage from the time of application. But this can be quicker, or it may be longer should they require additional information from you. So this is where the getting organised up front and making sure you provide the advisor with what they need really has an impact on the process and the timings of things.
That's very clear. Thank you, Andy. Phil, sorry. Last question, I think, before we end the session. How do I know if the mortgage type is right for me? And this one is for you, Andy.
Well done. You're obviously reading the questions and trying to sort of find the new ones. So listen, I think it's $1 million question, Nikki. I think we've answered some parts of that already through tonight's process and some of the questions and myths and everything else. Clearly, making the right decision on the mortgage you want to take is a big decision, and can make a huge difference to your financial health. There's so many options available, and it can be hard to work out which mortgage best suits your needs, especially if you're a first-time buyer. But clearly, if you've not had that much experience in buying a property and going through the mortgage process in the past, it can be quite a minefield for some people. When deciding which mortgage to take, you have two options. You can go direct to the lender, which we've already spoken about tonight, or you can go through a mortgage broker to get the mortgage. You might find a broker certainly more useful if your finances are complicated. We've spoken about the self-employed and how difficult it is to sometimes justify and evidence income. If your credit history is tarnished, as Phil covered earlier on, you know, if we've got bad credit, you know, that can make things a little bit more difficult. Or of course, which is primarily why people choose a broker, is to get the best mortgage rate that they can get. So it's a choice of all the market mortgages that are available, and being able to obviously get the right ones that suits their advice. Some of the things that I covered around, you know, the fixed rate terms, the cashback, all of those things can be, as I mentioned, a bit of a minefield. So worthwhile getting advice, certainly.
Yeah, absolutely. And I definitely think there's been a common theme, and that is we have mortgage professionals who can navigate their way through all of the different rates and mortgage products that are out there. So like anything, if you're dealing with an expert, then it can be made a lot easier. So thank you for that. I think that's all for now. What I would like to say is a massive thank you to our panelists, to Phil and Andy, for taking your time out this evening and answering some of these questions. If we haven't managed to get round to any of your questions that you've put in the question and answers, we will be getting back to you individually. The session has been recorded and will be available to watch back in the coming weeks. We are open all over the bank holiday, so no appointment is required. And if you'd like to go and pop along to one of our sites, then please do. And it just remains for me to say goodbye and good evening. Thank you very much.